What did you make of Jay Powell's comments, especially his emphasis that 2% inflation, that remains the target?
Look, I think, as you say, he was very much on script, and I think he was very honest as well, which is they are undecided about the next move, whether or not there will be one, because indeed, things are looking good, but has not yet achieved the goal. I think he wants to be very, very clear that the goal remains the goal, and consequently, they're not ready to say they're done. So I think he was honest, straightforward, and fortunately stuck very much to the script.
So we do have a number of inflation reports coming up. We have PCE. We also have 2 CPI reports. That last CPI report just 2 days before the next meeting. How important is each one of those? Do they each have importance, or is it really just the last one?
No, I think that, as he tried to say, it's really the totality of all the data, and so all of them do matter. I will say, obviously, the one that's just before the meeting will be the one that's very much on people's minds. But I think we should be careful not to get completely fixated on just one piece of data. He was very, very explicit and clear that they're looking at the data overall. So, yes, CPI, PCE, labor market, they're still very interested in, obviously inflation expectations. So there are a number of factors that we all have to think about, or that they will be thinking about, and no one should get overly fixated on just one piece of information that comes in.
What did you make of Jay Powell basically saying, that hotter than expected GDP report? Well, it's not that big of a deal. I think a lot of people in the market, at least, were concerned that might lead the Fed to possibly hike. But again, he did say higher for longer.
He certainly said higher for longer. Look, I interpreted the statement and his comments as obviously accurate. One number came in that was pretty hot. I would say, if there are more, if there's another read of that sort, that certainly leans them towards, the hike. And so I think it's all consistent with taking in, all of the data as opposed to simply one. Having said that, I think they are attuned to the fact that there's still quite a bit of forward momentum in the economy. Yes, rates will, particularly the 10-year, et cetera, will be weighing a little bit on performance. But that's why he's very much, and I think reflecting the committee, very much in a wait-and-see mode, on the fence, ready to go if they need to.
All right, we had 2 big market voices speak with CNBC yesterday, Stan Druckenmiller and also Jeff Gundlach. I want to get your reaction to their comments.
Higher for longer means we have a massive interest expense problem. A massive interest expense problem in this country that is going to be, I believe, the next financial crisis.
The chart is frightening. It just goes like this. All this stuff is ahead of us because we didn't extend the maturity of our debt. So all this debt is going to roll over in 4 or 5 years, and you're going to replace the 1% stuff with like 5%.
So comments again from Jeff Gundlach and Stan Druckenmiller. How concerned are you about the things that they're concerned about?
I don't think I'd phrase it exactly with the tone that they used, but I think the facts are absolutely correct. There's been a regime shift, if I can put it that way, from very, very low rates for a long period of time to higher for longer. And whenever there's a regime shift, the kinds of risks that they talk about certainly go up. And so I think they're right to point to these things. There is a heavy interest charge for many companies, individuals, and obviously the government that we all have to take into consideration. So, I think they're right to say not over yet. There's a reason why some private sector economists and others are still forecasting a downdraft, maybe even a recession. And so I agree with them. With higher for longer, we all have to get used to higher interest rate charges. That includes the government, and there are increased risks around that. So while I wouldn't necessarily use exactly the tone they did, I think the underlying facts that they bring out are actually true, and we need to monitor things closely. It is not over yet.
All right. Before we let you go, Roger, one last question. Do you think the Fed's done, or is it possible we could see one more hike?
Well, I think it's absolutely possible we can see one more hike. They've been honest. It depends very much on the data. So I think I would not yet say it's over. I would say let's watch the data. And by the way, I would say December may be a live meeting, but it could be that if the data call for it, maybe a move in 2024. So not over yet. Let's watch the data closely as they are and listen closely to what they have to say.